And welcome to Network. My name is Phumelele Zondi with your technology and social media news. It's SABC Network on Facebook, Twitter and Instagram. It's News Network at sabc.co.za on email. This week, our Twitter poll is asking you about whether you really worry about your data privacy. This as Google has been criticized for what some say is flip-flopping on the cookie process. And there's a lawsuit going on in America as they're accused of continuing to track people even if their location has been switched off. Results of that are coming up later in the program. Firstly, here's what's coming up in this program. We have details on hydroponics, especially in urban farming, and the type of technology that's used there. We find out about e-commerce that's set to grow to about 121 billion rand in a couple of years' time. And in our discussion, we chat about why it seems like a lot of tech billionaires lost a lot of their billions in the month of January. This as everything from e-commerce to gaming suffered. In order to help with food security, we do know that farmers are important, and you often need land to grow things like sugarcane, for example, behind me. But in urban spaces, this is often a problem. Some now are venturing into rooftops as they use various technologies, including the technologies that are needed in hydroponics.
Life isn't easy for small farmers. With large players well established, it's a challenge to gain access to funds, land, and even market opportunities, even more so if you are a female. One of the main challenges cities face in their journey towards a local and sustainable food system is the lack of space. But forward-thinking farmers are hoping to change this by turning to rooftops to feed their cities. With her stunning hydroponic rooftop farm, Zandile Khumalo is on a mission to make Gauteng a little greener. Located on top of the Morningside shopping center, she grows a variety of fresh vegetables and herbs that she distributes to several restaurants and businesses on the floors below her.
We grow leafy greens from baby spinach into our grow media beds. We've got our different types of lettuce, which are 5 varieties that we're focused on, and they are used in salads by the restaurants that we supply downstairs in our shopping center.
Hydroponics, as this is called, is quickly becoming a niche method of food production, but now the latest technologies are giving it a new lease of life.
So hydroponics is a technique that we use in farming where we feed nutrients to the roots of the plant so that the plant can be able to grow to its optimum best. The irrigation that we use, we recycle our water, therefore it helps us to also save on our water and also on our electricity.
In Pretoria, Farmers Choice Farm is proving that the hydroponic farming method is a smarter, more sustainable and commercially viable way to feed cities.
So if you can check, in most cases in South Africa, there's scarcity of land. So if you're doing hydroponic, you can actually do it in any space that you have, even on top of your roof or anywhere where you get a space, which will simply enable you to sort of use any type of system that you have.
Right on top of Menlyn shopping center, the rooftop farm is providing the city of Tshwane residents and local restaurants with lettuce, baby spinach, and other fresh organic vegetables.
We looked at the people that we want to service, which is mostly the restaurant within the mall. And we had one-on-one session with each and every restaurant just to get a feeling of what they might like, what not.
As the concept gains popularity, there are challenges. In South Africa, large farms tend to have greater access to more resources, while small farmers generally struggle to even sustain or grow their businesses.
The space that we're in, Menlyn shopping center, is one of the hardest spaces to find because you have to go through a lot of people in order for them to approve. And the other thing is that it needs an engineer to approve your structures and all that. And depending if where you are there's water or there isn't water, because if you're doing hydroponic, most definitely you need water.
Make sure that you get to understand your surrounding in terms of how does the location have in terms of that, in terms of thefts, because the equipment that you buy with hydroponics is quite expensive and you wouldn't want to expose your business into always having theft.
One agri-startup is hoping to use technology to level the playing field a little for small farms.
We realized it doesn't matter whether you are in Free State, you are in Harare, or you are in Kafue region in Zambia. The problem that farmers are facing is exactly the same.
Launched in 2018, the app already works with a network of around 2,000 small farmers across the continent, as well as hundreds of third-party suppliers and agriculture advisors.
We bridge the gap between owning the equipment and having access to the equipment. What we have done with the tractors that are on our platform is they have a device in the tractor which we put in there, which is able to measure the hectareage that is done. So as the tractor is plowing, it measures and say, okay, Sandile has done 12.5 hectares.
It has an online store for selling raw materials like seeds, chemicals, and fertilizers, and also supplies information and technical support.
For the farmers that we've saved so far, we've been able to then give them access to a kind of online agriculture specialist, online agronomy service. So we know you planted your maize on 21st of November.
Similar projects are also popping up in Hillbrow, Newtown, and in Braamfontein, with rooftops supplied by Josie Housing Company.
Before now, a lot of people were not shopping online, and this has been aided by the COVID-19 pandemic. Now people get things like medicine to fresh produce that they need for their food on various websites. And it's been said that e-commerce is going to grow up to about 121 billion rand by 2027. So what's growing e-commerce so much? The Mobile Economy Report says 615 million people in sub-Saharan Africa will subscribe to mobile services by 2025. On Black Friday in 2020, the number of people shopping online increased. PayFast, for example, had a rise of over 30%. Before the pandemic, it was difficult to get many to shop online. Many retailers in South Africa did not have this option either.
When the SARS outbreak happened in China, okay, history told us, or tells us that, you know, from that event, because what happened in China was that there was a boom in e-commerce, and that's where a lot of the Alibaba, AliExpress actually, you know, grew exponentially. And we are seeing the same thing here in South Africa as well, where people are looking at alternative ways of selling their product reaching consumers, because action is coming from retailers, and plus consumers are also looking for easier ways, and also a lot of them have actually discovered easier ways for them to actually get product from retailers into their homes.
Even though grocery stores were open, social distancing still needed to be practiced, and that's why many would shop online and stay indoors at the height of the COVID-19 pandemic. Pick n Pay bought startup app Bottles and relaunched it as a Pick n Pay ASAP. Checkers was assisted by having launched their 60/60 before the pandemic. Now other startups are coming into this space. They say because of online safety issues, trust becomes a huge problem that consumers grapple with.
If I send you something, I have no confidence that you will send me my money, or the other way around. But what I'm finding now, which was expected as a new platform, is trust again. Trust that we will be able to keep both promises to the buyer and the seller.
Research and Market says e-commerce in South Africa will grow to over 121 billion rand by 2027. This is a massive jump from 63 billion in 2020. Because people have started, the fears of the past could be largely gone.
Okay, so we have been seeing startups, and we definitely are going to see more. But what we're also seeing is startups that have already been there. These guys have been doing this stuff for years. I mean, like us at Dropstore, we launched our platform like 2 years before the pandemic, and then once pandemic came, we grew exponentially.
2020 was our record year of growth. It really was. And I think I probably would be exaggerating it if I said that we grew purely because of COVID restrictions, people not going to, physical stores and rather opting to shop online. I don't think it's really that. It was great that we had a developed, established, trusted brand and online store, but we also had the product for the time. So most people are not going out to work, to the office, so they're staying at home. So we had leisure products that also sold exceptionally well in that time, but that were really great for a professional sort of appearance as well. And then thirdly, we had built momentum. I think it was just reaping some of the rewards or reaping what we sowed from the previous years. So it's a mix of those three.
Fintech has always done well in Africa, but the focus before now was on mobile money products. Because of the increased popularity of e-commerce, there are many startups that are starting to be favorites with venture capitalists. Ivory Coast Africa, for example, recently raised 95 million rand. Flutterwave received a whopping 15 billion rand. Cheaper Cash also did really well in venture capital funding.
And you come to realize that, no matter whether you're an individual or a business, moving money just within Africa's borders, trading from Ugandan shilling to Nigerian naira, is actually quite difficult. That is because the financial system that we use on the continent today was built on top of essentially the US dollar as an intermediary to facilitate international exchange. So you find that there's very little liquidity between African currency pairs. So if you're trying to convert your Zambian kwacha to your Nigerian naira, good luck finding a Forex Bureau who's going to accept it. They're all going to say, bring us dollars, and then we'll be able to convert that. So there's a lot of friction in the financial system, but then there's a lot of trade in the economy or the business system. And what we're trying to do is to bring these two worlds closer together by allowing those traders, allowing those individuals to be able to more easily facilitate exchange between currency pairs.
It's not just South Africa that will see this e-commerce boom. Juniper Research says changing consumer behaviors will see the global e-commerce market growing to beyond 117 billion rand by 2026. Many parts of the African continent suffer with the issue of counterfeit medication. There's a startup in Nigeria that's trying to help in the West African nation.
Startups in Nigeria are helping fight counterfeit pharmaceutical drugs in the country. According to the National Agency for Food and Drug Administration and Control, the most counterfeited are drugs for anti-malaria pain and antibiotics. In 2009, Biofem Industries had their anti-diabetic prescription drug glycophage counterfeited in the market, which caused a decline in the revenue.
After the experience we had, and we were able to mitigate that experience using the technology, we decided that all our products was going to have it, so that we do not wait till when it is counterfeited before we protect the patient, which is primary to us.
Lagos-based Checker Technologies mobile app allows patients to check authenticity and enables manufacturers to see the number of new customers using their products.
What we discovered was that people don't necessarily scratch off labels on products, which is why we went off with the idea of, putting more like an incentive on the sticker labels through a scratch verify win model, printing that exactly on the sticker label. So when the consumer sees the sticker label, has the idea that it's stand a chance of winning something, and that can basically divert them towards authenticating that product. And we've seen that work for us, right? Over 60% of our labels get authenticated in the market.
To fight the flood of fake pills, the agency in partnership with startups has created stickers with unique codes that manufacturers and distributors can attach to boxes and sachets of pills. Consumers can then use apps on their phones to scan the code and confirm their authenticity.
That has boosted the confidence of people in this. So modern technologies have really helped. So, but for that, people would go and imagine some of the drugs in time past that people will ingest without that technology. So the technology has really helped.
Checkit offers services in various countries in Africa and are working to build in marketing tools to boost authentication of products.
It is SABC Network on Facebook, Twitter and Instagram. After the break, we chat about what's been causing so many losses in the tech industry as 2022 starts. It is SABC Network on Facebook, Twitter and Instagram. It's News Network at sabc.co.za on email. Welcome back. Now, the world's richest people lost a lot of their billions at the start of 2021. This as everything from cryptocurrency to e-commerce to gaming was not doing well, and people were not investing their money as they did in the last 2 years. Now, you will remember that we've told you on several occasions here on Network that the tech industries were doing really well and were big gainers during the COVID-19 pandemic, especially when hard lockdowns were implemented by various countries. Now, to look at all of this is Yaron Assabi, CEO and founder of digitalmall.com. Hello, and thank you very much for being a part of our network, Yaron. Maybe if you can start by telling us about the last 2 years and why those 2 years were so great for tech industries.
Yeah, I think that, the pandemic has obviously made people understand that they can do everything remotely, that they can isolate, they can work remotely, they can participate in online shopping, which I started online shopping really early in South Africa in the late 90s. And there was hardly anybody buying online. I think what the pandemic did is really made online shopping very relevant. And a lot of the digital transformation that needed to take place in society was almost accelerated in the last couple of years. And I think that a lot of the tech stocks, did really, really well because take Zoom, for example, which we're using right now for this conversation, their share price went crazy because everybody started using Zoom, right? And it was brilliant timing for them to actually get into this market as a fairly new entrant at the time, 2-3 years ago, and they just skyrocketed, A lot of other companies like Amazon went, exceptional growth because they were already doing really well with online shopping, but all of a sudden everybody was doing online shopping. So they've got a whole bunch of new shoppers that came in, and we've experienced the same here in South Africa. We've seen that if e-commerce in South Africa was less than 4-5% of total revenue for retailers, all of a sudden it became very significant, and it was over double digits, and it's doubled in size in a couple of years. So I think the pandemic has really changed the landscape, and obviously technology is in the center stage when people are primarily on their digital devices isolated at home.
So what happened that's led to these tech billionaires losing so much of their wealth?
You know how the stock markets work, right? The stock markets are always about the future, right? If you can predict what the future is, you're going to make a lot of money, which stock is going to do really well. And if the market felt that some of the tech stocks, and the Nasdaq is very tech heavy, so it's about 8% of it was influenced, and it was a huge drop for some stocks, is because maybe the market felt that some of these stocks were too high. If the pandemic is going to change again and people are going to go to traditional retail, for example, with Amazon, that would be a threat that would impact their share price. There was also a discussion in the US, around increasing interest rates, which impacts everybody that's geared for growth. And a lot of the tech companies are very geared for growth generally because it makes more sense. If you're generating very good profits, you want to be able to gear your growth, and interest rates would have an impact. But I think it's primarily that the market, is very volatile, and when things are starting to look positive, something that had a positive impact before might turn negative, and there's a bit of a forward-looking view that some investors are taking around where the stock should be and what is the right valuation of.
We often talk about the post-pandemic era and whether what we did during the pandemic is going to stay. We were using a lot of tech during the height of the COVID-19 pandemic. How do you foresee the post-COVID-19 era?
You look at Bitcoin's performance last year, okay, over the annual growth has been phenomenal. But it always has these jittery, spikes and as regulatory frameworks, a lot of resistance from traditional banking has happened and regulatory frameworks were imposed on cryptocurrency. It started losing a bit of value. The whole idea of crypto, if you think about it, is liberating the financial system. And the moment regulatory frameworks are restricting and say, what you're going to do. So, for example, in South Africa, I'm sure you know that they clamp down on people that have cryptocurrency. They have to declare it, they have to pay tax on it. It's no longer just like, you're going to have money that's outside of the system.
Yaron, how long is it going to take for tech industries to bounce back from the losses that have been made in January?
I'm very optimistic about what technology can do for job creation in Africa. And I almost think that the pandemic was a wake-up call for Africa to digitally transform quicker and be more competitive with the rest of the world and not just rely on natural resources and the traditional way of doing business, but rather move towards an IP-based economy, a technology-enabled economy that creates very meaningful jobs that can compete globally. So, for example, in the cybersecurity industry, I believe that Africa's got a huge opportunity to create very meaningful jobs that will serve the African continent as well as the rest of the world.
All right, Yaron Assabi, thank you very much for being a part of our network. Yaron Assabi is the founder and CEO of Digital Mall. Thank you very much for being a part of our network. And with that, let's take a short break. It is SABC Network on Facebook, Twitter, and Instagram. Welcome back. Here's what else took place in the rest of the world in the technology space.
Samsung Electronics forecast a recovery in global tech device demand in 2022 after reporting its best fourth quarter profit in 4 years, but warned of ongoing challenges from supply chain issues and COVID-19. The tech giant said its memory chip business this year expects server demand to grow, attributed to increases in IT investments and new high-cost CPUs. And now in the USA. A Brazilian umbrella sharing app, which has for several months been giving New Yorkers a way to cope with unexpected downpours, is now preparing to expand to Europe. Renbrella launched in 2018 in Sao Paulo, a city known for torrential late afternoon summer rains. It offers an app that allows customers to borrow an umbrella from an automated kiosk and use it free of charge for 24 hours.
So right now we are basically in Brazil. That's where the company started. Now we're expanding within Brazil, and we're bringing this solution to the world. The first city that we're basically coming is New York, because it's a city with a lot of rain, with a lot of pedestrians, and of course something that we do is we have it's an advertising market that is very strong. So the way we actually make money is we basically sell the advertising on top of the umbrellas, and that's what basically generates revenue.
The company launched in the New York boroughs of Manhattan and Brooklyn in October with 35 kiosks, each with 100 umbrellas, under agreements with real estate firms such as WeWork, Tishman Speyer, and Beacon Capital. And now in China. A hotel in Beijing is using a robot to deliver food as the Winter Olympics approaches. China National Convention Center Hotel in Beijing, an official Olympic hotel for the Winter Olympics, which starts on February 4th, the robots are being used to reduce the spread of COVID. Robots arrive at the guest door, the guest types a PIN code into the robot, and the robot opens to reveal the food. Once the guest has taken the food out, the robot leaves.
Because of Google's problems with location tracking in America, as there are people who are now suing Google for allegedly continuing to track people even if their location is off. This week, our Twitter poll is asking you how important you think your data privacy is when you are on those online platforms. 86% of those that responded to our poll say yes, they do worry about their data privacy online. There's 10% of you who say you do not, and a further 4%, and in last position by a margin, are people who say they don't really think about it. And that's it. Thank you very much for being a part of our network. From me, it's Phumelela Zondi. You can find us on SABC Network on Facebook, Twitter, and Instagram. Use network at sabc.co.za and email. It's bye-bye from us.